How's it going, investors? Ari Gutman here with the TipRanks team and more value stocks that are hovering within their 52-week low range, which means they, of course, may be of interest to all of you, especially as analysts are rating each of them as a buy with their ability to deliver through on dividends for shareholders. With that said, let's go ahead and dive right in. Just before we dive in, this video is coming in just after the market's rally, whereas the Dow jumped by 1.4%, the S&P added 1.8%, and as for the Nasdaq, it climbed 2.1%. However, the economic backdrop hasn't changed, and therefore we may see some more volatility on the way, especially with the next Consumer Price Index report being released on September 13th, followed by the Federal Reserve finalizing their interest rate hike decision come the end of the month, which typically, once the Federal Reserve speaks, shakes up the market. Therefore, it certainly may be a wise move to invest with some prudence, perform your due diligence prior to each investment decision, and most importantly, given the amount of uncertainty that's being added to the market, just continue to seek value opportunities, which leads me to our first stock on the list today. That's BCE Incorporated, formerly known as Bell Canada Enterprises, which you may already be able to deduce from their former name that it's a telecommunications provider, which also has several mass media assets under its operation. Now, it's very similar to the American counterpart AT&T. Now, BCE was founded back in 1983 and has since amassed a market capitalization of $43.43 billion. However, it makes today's list as it's currently trading within its 52-week low range at $47.72 per share. That's nearly 6% down on the year. And with its PE ratio below 20 at 19.2, along with analysts forecasting growth come their future, with a target share price rising back up to $52.46 per share, it certainly can make for an interesting investment, especially as we're seeing hedge funds, specifically Gotham Asset Management, scoring more shares worth of BCE Incorporated at a value of over $1.5 million. Now, as we await that share price recovery, shareholders of BCE Incorporated will also be able to count on their dividend, as telecommunications companies are typically pretty stable during uncertain times. Now, in regards to that dividend, it has been shelling out a quarterly dividend with a dividend yield coming in at 5.86%. Next up, I want to bring us back to the United States and jump into the financial sector by way of breaking down Rowe Price, which is a global investment management firm offering a wide array of services from account management to retirement planning. Now, it's built up quite the reputation for itself since its founding back in the 1930s, which is translated into its market capitalization amassing to $26.97 billion today. Now, speaking of today, based on the economic conditions over the last several years, Rowe Price has not exactly fared well, given the vast majority of their assets are within the stock market, and particularly the Nasdaq. So you can safely assume that Rowe Price's stock share price is down on the year, as it is yet to see that economic recovery it needs. Rowe Price's share price is down on the year by 37%, trading for $118.66 per share, with a PE ratio coming in at just 11.4, below many of its competitors. Now, while insiders have in fact been selling shares over $1.6 million worth, if we take a look at what smart money is doing, the bigger guys on the street, we can see that hedge funds have been doing the exact opposite, with multiple hedge funds scoring shares and building positions with the firm, from Gotham's $9.7 million investment to Provident Trust investing over $253 million in the firm. Talk about positive signs for the longer-term investors out there. There you have it. Not to mention, investors on TipRanks within the last 30 days have also been buying more shares worth of Rowe Price. Now, the truth is, it may take some time for a legitimate recovery given the nature of Rowe Price's business model and the state of the market, but for those shareholders who are willing to hold tight, a dividend is rewarded, and Rowe Price is paying a solid dividend coming in at a 3.85% dividend yield. And finally, as for our last stock within its 52-week low range, we have a real estate investment trust, which, by the way, during times of high inflation, make for wiser investments and also typically pay out higher dividends. With that said, we're going to be diving into Medical Properties Trust, which you could accurately assume is a REIT dealing with healthcare facilities from hospitals to smaller scale healthcare properties. At this time, Medical Properties Trust has 438 properties within their portfolio, which for only being founded in 2003 has scaled quite quickly. Their market capitalization is just under $8.5 billion, hovering around $8.49 billion. In regards to their stock share price, it is down on the year by almost 40%, whereas it was once trading for $23 per share, but now trading for $14.17. When it comes to this REIT, last quarter, hedge funds sold shares only for hedge funds more recently to come right back in as that stock share price becomes more attractive for them. And across the board, we can see that there's a bullish blogger sentiment along with favorability when it comes to the retail investor. Now, analysts are also optimistic for Medical Properties Trust's future when it comes to their share price, as they have a target share price coming in at $18.25 per share. Now, we also have seen investors across TipRanks scaling up their position with Medical Properties Trust just within the last 30 days. And as shareholders await the recovery in that stock share price, they're also going to be able to collect on a dividend yield coming in at a whopping 7.96%. Now, investors, there you have it, from BCE Incorporated to Rowe Price and Medical Properties Trust, the three stocks we're bringing to your attention, given that they're within their 52-week low ranges. Now, feel free to let us know your take on any or all three of these investments by simply dropping a comment down below. And as always, keep in mind today's video was not intended to be stock advice, but rather a means to showing you all through our tools on TipRanks to help you make more informed investment decisions. Now, until next time, thank you for tuning in.